Okay. Anyone been to the Techno Invest Roadshow in the past? Iggy has. Iggy's presented many a times at Techno. Very excited. We're going to have it back at this great hotel on Monday, the 7th of November.
And you'll always remember that date, won't you? Why will you remember that date, Jackson?
Yes, it's a very important day for my existence. But here's the program. We're going to launch it once all these public holidays finish, bearing in mind that there's a public holiday tomorrow, there's a public holiday for you guys on Friday, and there's a public holiday in Perth on Monday. So come Tuesday, when Australia goes back to normal business hours, we'll launch the Techno Invest Roadshow, and there'll be a QR code on it for you guys just to go straight to our website. Andrea will send out details about going on to Eventbrite, and looking forward to that show. So without any further ado, it's time for Chrissy to introduce the great George Bauk. And George is a really passionate Carlton supporter, so just be really nice to him as he goes up to the stage, and had a good moment on Sunday night. So finally Carlton got a trophy to put in the cabinet.
You're pretty mean, aren't you? Poor man, he did his therapy for it. He's had weeks of it and you just keep bringing it up. You okay? He's all right. He's a big sip of water. And his therapist did suggest that he looks at the positives in his life, the successes. And this is one of them, isn't it, George? Come on up. All right, let's see if it can help all of you out as well with your investment portfolio. So we are talking PVW Resources, and PVW Resources is led by this fellow and a specialist team with a proven track record in rare earths discovery and development. They're working to unlock significant new rare earths and gold discoveries at its flagship project, which is over in the Tanami in WA, correct? So the company's maiden drill program commenced in late June with all the details, and to keep us up to date, would you please officially welcome Mr. George Bauk?
Thank you. Firstly, I'd like to thank Jackson and Stewie and the whole team for putting this roadshow on. I think we all got shocked when we got told there was a public holiday tomorrow, and well done to reorganise today. And I think it's great that all the presenters and all the people could come here at such short notice. I am a Carlton tragic, and there's a lot of parallels you can run between the Carlton Football Club and rare earths. Our success is about as frequent as the stock market rewards rare earths almost. So it was 1995 last time we were celebrating a victory in this wonderful state. 1995, 27 years ago. The tape is getting very worn, but anyway, it'll be on this Saturday night at my place. So it's amazing to see all the rare earth stories, and I know this conference was really trying to bring a lot more rare earth stories over the years, and to see how many rare earth stories are here is actually quite is great. I've been in the industry for 17 years with rare earths, starting with Arafura back in 2005. And whilst that seems like a long time, it's actually only a very short period of time. And you sort of look at it and think it's the right time. What was different back in 2010, we had geopolitical issues, but probably not at the same way it's being played out today. We had the China versus Japan in the South Sea, and they stopped selling rare earths to Japan. The price of dysprosium went to $4,000 a kilo, and there was a crisis. Sadly, the only thing that came out of that crisis was US and Japan went to the WTO and complained about it, and the Chinese eased off, and everyone felt comfortable again. And 10 years later, we're in the same place. So the good thing about it this time is we're seeing a lot of genuine exploration effort looking for new discoveries. And speaking to a lot of people, I think what we can realize is that with things like the electrification and many other things that are more here today than they were 10 years ago, people can actually feel the push for demand, as opposed to 10 years ago when the whole electric vehicle thematic was a maybe, could be, if you like. So things have changed. You've only got to go back about 15 years ago, and a lot of geologists used to walk around the bush, and as one famous geologist, I can't see him in the room, said to me only moments ago, he goes, you used to spit on this pegmatite stuff, like you couldn't sell it for anything. This is only 15 years ago, right? Rare earths, 12 years ago when we discovered the Browns Range deposit in my previous employer, we didn't have the technology to help us in the field to what we have today. and we're still all learning about it. So we're in that really early phase, and I think we are in the right time. The right team. So we have a couple of people from that journey at Northern Minerals, where we took a project from exploration through to production. So we actually physically sold heavy rare earths on the market. So we've got a good line of sight. We know who the players are. And that gives us a lot of information to help us look what we're looking for. And we've got Robin Wilson as our consulting geologist, who is helping Carl Weber, who's here with me today, as our exploration manager, help us define and look for our project. Right place, we think we're in the right place, and I'll take you through that now. So this is a standard disclaimer. So we're located in Western Australia, 90 kilometres south of the famous Browns Range project, which some people might not be totally familiar with, but it's probably the greatest heavy rare earth deposit outside of China. And that was only discovered in 2012. So it's only 10 years ago that ore body was discovered, 90 kilometres north of us. We've got fantastic infrastructure around us. It's only getting better, that I'll talk to you about. We're in the middle of a drilling program. We're well funded, and we've got a great portfolio of assets in Western Australia. You talk about, Chrissy keeps talking about Pilgrim Minerals, or she keeps saying Pilgrim Metals, but anyway, it's Pilgrim Minerals, which was the buy of the century last year, and I hope someone can replicate that. I won't mention who that might be, but our share price is languishing at about 18 cents. So market cap's under $20 million. You take away our cash, and we're probably about a $10 million EV. So when you compare it to many of our peers and that, there's huge upside in the PBW story. So I'll take you through our project now. As you can see there, that's the discovery of Browns Range, sitting 90 kilometres north. We're located just off the Tanami Road, and all famous geologists will tell you that great discoveries are found near these structures called roads, so it makes it easier for them to find things. That fault is actually not necessarily correct. It's more around the Tanami Road. The government's adding $900 million state and federally to actually seal that road. And you might see some news in the AFR and the Australian that talks about how critical that is from a defence perspective. But this changes the dynamic of this whole project and region. And we're located within 20 kilometres of that infrastructure, which is simply outstanding. We have 1,200 square kilometres of contiguous land. We've developed a model, and again, you only got to go back 10, 12 years ago, and if Robin Wilson was here, who now is one of the leading experts in xenotime mineralisation around the world, we actually were trying to develop that model. 2010 and 11, we're asking ourselves, okay, how big does this have to be? What grade could it be? What dimension could it be? I mean, we're only talking 10 years ago that we were trying to come up with the model of how this mineralisation could form. So we've modified that and applied that to what we're seeing at Browns Range, at the Tanami project. And there's three key ingredients. You're looking for the right stratigraphy, the right style of mineralisation, and the right plumbing system. So what we have here is 18-kilometre unconformity. That's pretty much up against the WA-NT border. And what we've seen on surface is significant heavy rare earth mineralisation. So around the Castella area, we saw rock chips going up to 12.5% TREO, which is spectacular. And we saw a significant amount of it. So what that tells you is that there's rare earths in the system here. So it's an absolutely positive, encouraging piece of information to help you. The geologists have identified this structure, which is important. And so now it's all about drilling this area, which we've started and commenced drilling. Now, this is the first drilling program that's been undertaken at Watts Rise. So you've got to put that in perspective, is that there was some drilling in the area 10, 12 years ago, very limited, more around Castella and for this area for gold. But this is the first 5,000 metres in this area. And we've identified an area that's got 380 metres by about 150 metres of mineralisation. Now it's thin, so it's unlikely to be an ore body, but to think that we've seen the rare earths deposit above an unconformity across this amount of mass gives us huge encouragement that we are somewhere nearby the primary source. So a lot of people are sort of, as we all hope to find the ore body on the first drill hole, this is extremely encouraging to find this amount of mineralization in our first drill program. This is a 3D image of it. It's sort of, it's about 20, 40 meters to about 100 meters at depth. It's sitting above the unconformity in the Pargee sandstone. So with this, we now need to do work on the plumbing. So what we've got to do now is we've got to do some ground-based gravity. We need to get a structural geologist out there and get better definition around these areas to look for a bigger trap. Because what it's all about is where this fluid hopefully forms into a trap, which creates a size big enough for a deposit, and we're off to the races. Again, when you look at some of our results, and again, we're all still getting our eye in on rare earths. The greatest deposit outside of China in heavy rare earths averages 6,600 parts per million, dominated in dysprosium and terbium. So when you start putting these intersections in our first program of 2 meters at 6,500, 1 meter at 9,500, just compare that to what's at Wolverine. So we haven't found the whole body together, but you're finding pockets of mineralization that are forming in the right concentration. So this is hugely exciting. So we, you know, Carl and the team here have got a lot of work to do, but we've just began our journey. Super excited. Back in 2011, when we started drilling, we didn't have a portable XRF. So it was a very different style of drilling. Only 11 years ago, technology's improved to really help the explorationists on site have the portable XRF. So we've got a lot of soil cover. So again, airborne radiometrics can help you get to regions given that it's association with uranium and thorium. But other areas, if you're under 30 centimeters of cover, you need to use other techniques. So we're currently doing some air core drilling with particular reference to the outskirts of what's rise to further define areas of mineralization to drill with the RC rig. Buy one, get one free. The Japanese back in 2010 always wanted to find a rare earth deposit that was a byproduct of something else, because they never felt that you could find a deposit that could carry the economics of rare earths on its own. And given where we're located in this fantastic belt with Cali down here, Newmont's great mine, these are the last drill holes that were drilled at the Watts Rise project for gold, and they're pretty spectacular results. So we're waiting for the results to come back from the recent drill program. But you can imagine if you found a rare earth deposit with gold credits or gold credits with a rare earth, you know, that would be a stunning outcome to have those two styles of revenue streams coming into the project. So just a little bit about rare earths. Got a couple of minutes left. Yep. So you know what they're for. The 4 sweet spots of rare earths, neodymium, praseodymium, dysprosium, and terbium. They're the 4 elements that go into a permanent magnet. In 2011, Siemens came out and said that we don't need dysprosium anymore. We've found a substitute and we're going to be DY free. So it's the wind turbines are not going to need it. The price of dysprosium crashed. Have you ever seen the apology from Siemens to say they've not been able to achieve that? It's amazing how you're allowed to say something on the front page, but the apology goes on page 74. But anyway, shit happens. So that's the stuff that we're up against, if you like. But the governments are finally stepping up, and I think we've seen some amazing transactions of recent times. For Iluka to get $1 billion loan from the government's an outstanding outcome, and it is actually good that we're having a mixture of the junior small caps making their way through with discoveries, but it's also good to have the big balance sheeted mid-tier companies participating in rare earths, so we continue to have successful organisations. We can't afford to have broken companies. We need to have winners. And at the moment, Lynas is a winner, and so is MP Materials. So it's great for the industry. I'll probably leave you with one mark because I am running out and I can see the 2 minutes. People talk about year to year that the price of rare earths, the price of rare earths has actually been going down the last few months. And I think I said it in Perth that trend's actually positive, and most people think there's not a lot of positivity with a downward trend. That is China manipulating the share price, right? Now, Lynas a couple of months ago had no access to water and they had to stop production in Malaysia. So they're one of the biggest producers outside of China. So you got supply issues, demand pressures, and the price going down. I'll let you guys figure that out. That is a positive sign, but the Western world has to work out how to get away from that mechanism of pricing and develop our own pricing. We've done it in some of the other commodities. We broke away from the way cobalt used to be priced many years ago. I think someone's got to be brave and do an alternative pricing mechanism for rare earths, and that will help people get the support from debt and equity to develop these projects. That's the great team. Apologies for always seeing my face. It's Xenotime. If you're going to ask someone about their project, if you want to know one smart question, you want to go up to a rare earth person, ask them what's the mineralogy and how do they know it's correct, because there's only 4 styles of mineralogy that's ever commercially produced rare earths: basnazite, monazite, xenotime, and ionic clays. Go the Blues.
Good on you, George. Which one of our presenters this morning, I was trying to remember, one of them showed a slide up, and it was one of the first 2 slides I think they showed in their presentation, and it showed the uptake of cars. Do you remember that one? So between 1903 and 1913, that 80% of Americans adopted cars as a vehicle. So it went from 0 to 80%. So the uptake is so quick. So, you know, you point that you are just here in the right point in time. We are making technology. Our tech needs these critical minerals, which is why, I mean, for this conference, we were oversubscribed. We were oversubscribed in Perth. We were oversubscribed here. There are so many people that wanted to get on board and wanted to present in front of yourselves. But we only take the best, don't we? And the next fellow is no exception. Iggy Tan, considered an early trailblazer in the lithium industry, he's now trailblazing his way in the sodium alumina solid state batteries. And he wants us to focus for the next 15 minutes on the potential of Altech chemicals.
Welcome to the Batteries of the Future report. There are some real downsides to today's lithium-ion batteries, stumbling blocks that are the focus of international discussion. The batteries can overheat through thermal runaway, which can result in devastating fires and explosions. They operate best in a fairly narrow temperature range between 15 and 35 degrees Celsius. And the lifespan of lithium-ion batteries is limited to between 7 and 10 years, depending on their application. On top of that, lithium-ion battery manufacturers are at the mercy of both supply and pricing of a range of critical metals. Take lithium, for example. It's the most critical component of a lithium-ion battery, and the price has jumped 6-fold since the start of this year, 2022, adding upwards pressure to production costs. Add to that, cobalt is considered the greatest material supply chain risk for the industry in the short to medium term. And whilst the Democratic Republic of Congo produces about 70% of the world's supply, human rights abuses continue to raise ethical concerns. There are also supply chain concerns around graphite and copper, which make up the anode part of the battery. The industry is heavily reliant on China because it produces 90% of all graphite anode material. Therein lies geopolitical risk. A standard electric vehicle requires 2.5 times more copper than a standard internal combustion vehicle. A recent report suggests there aren't enough copper mines being built or expanded to provide all the copper needed to produce electric vehicles into the future. But an alternative does exist. The solution is Altech Chemicals Serenergy Battery, which uses sodium alumina solid state technology.
Good afternoon, everyone. Firstly, let me explain a lithium-ion battery. I'm sure people understand this, but in a lithium-ion battery, you have the anode part, which is the graphite. You have a copper collector. On the other side is a cathode and aluminium to collect the electricity. And in the middle is a flammable organic solution. The separator is also flammable. Now, the battery industry has been moving towards solid state technology. Does anybody know what solid state technology is? Essentially, it's replacing that liquid electrolyte with a ceramic piece. And the ceramic allows the lithium to go through it. There's no liquid electrolyte. and that's solid state technology. So lithium-ion batteries have some challenges. You've seen all the reports of fire, explosion, and so on. Why is that happen? Essentially, you get overheating, physical damage. The temperature of the battery soars about 600 degrees, and you get a fire. Now, normal fires, if you douse it and you take the oxygen away from the fire stops. But in a lithium-ion battery, it's nearly impossible to put the fire out because it generates oxygen at the cathode end. In the cathode, it generates oxygen. So that's a big issue. The temperature range that a battery operates is very limited, between 15 degrees to 40 degrees, very narrow temperature range. And I'm sure you've heard that lithium-ion batteries in the cold climates don't actually work that well, right? So at 0 degrees, your battery capacity drops to 70%. The other thing is that during the charging and discharge of battery, lithium degrades. So overall, they can only guarantee 8 years on a battery on an EV, and on grid storage, maybe 7 to 10 years on that. And then you've seen the lithium price increase 6-fold in the last 12 months. Well, people like Chris Gale, he doesn't care because he's a lithium company, but it's put a lot of pressure on the cost of lithium production. We know the Congo supplies 70% of cobalt in the world, and the human rights issues is causing ethical concerns for the lithium-ion battery industry. And then finally, as in the video, 90% of graphite comes from China, and there lies some geopolitical risk for the lithium battery industry. And then finally, copper, 2.5 times more copper in an EV compared to a normal vehicle. And there's a recent report that shows that there are not enough copper mines being built to meet just the EV demand. So is there a battery that is fireproof, a large temperature range, greater than 15 years life, no lithium, no graphite, no cobalt, and no copper? And this is our battery, Serenergy Energy batteries. They're essentially run on salt and nickel metal. Essentially, they look like these cylinders. About 40 of them go together in a very big unit. And that's a 5 kilowatt unit. We didn't develop the technology. It was developed by a German institute over 8 years, spending 35 million. And essentially, the key ingredient is salt. So the thing with solid state technology is that we don't have a liquid electrolyte. And because we don't have a liquid electrolyte, it's not prone to fires or explosion or thermal runaway. So the batteries are completely safe. The temperature range, it goes down to minus 15 degrees to 60 degrees. The internal of the temperature runs at 300 degrees, and it's insulated, so you can actually touch the outside of the battery. So think of it like a mammal. It's got its own heating system, and mammals operate in the cold weather. All right, so large temperature range. The sodium doesn't degrade in this battery, so the life of the battery can be up to 15 years, so long cycle life. And this is a great test that we've been done by a group in Canberra. And you can see here, a lot of the lithium-ion batteries tend to degrade over cycle life. Our batteries are very stable. In fact, it's actually growing in capacity. So what we use is common table salt. We mix it up with nickel. Now, salt is actually very reactive. Sodium is very reactive. It's an alkaline metal. It sits under lithium on the periodic table. And it's a great battery element. We don't have any cobalt. We don't need cobalt to boost the energy of the battery. It's cobalt free. And the best part is that we don't have any anodes in the battery. It's a self-forming anode when you charge, and it discharges, it dissolves. So we don't need graphite, and we don't need copper. So graphite free and copper free. And we believe that these batteries are ideal for the grid markets storage. And the reason for that, if you look at this chart, the bottom of that is specific energy, the side of it is the power, and you can see the top part of the lithium-ion battery where you need a lot of power like a truck. You use a lot of cobalt and nickel, and down the bottom is a lithium iron phosphate battery. You just need a lot of energy. You don't necessarily need a lot of power quickly. We sit in the middle where our batteries can charge for 4 to 6 hours and discharge for 4 to 6 hours. Ideal for the grid storage market. Okay, the energy is very similar to lithium-ion batteries. And as I mentioned, grid storage is growing as fast as the EV sector. At 28% year on year, it's growing. It's expected to climb to close to 15 billion by 2025. So the potential for the market is very strong. And we don't compete in the EV side where it's very competitive, very tight margins and so on. Now, the key part is how does this battery work? Very exciting technology. You get a ceramic tube. In the middle, there's a positive electrode, and you fill that tube out with salt and nickel metal powder. We flood it with a solution of sodium alumina chloride as the medium, and this ceramic tube just sits in a canister. The canister is actually the negative terminal, the positive terminal is in the middle, and that's what it looks like. So the canisters, you put 40 of these canisters together in this large vehicle, and that's your battery. So when you charge it, the sodium goes across through the ceramic medium, and it forms a molten sodium anode. It's a self-forming anode. If you're interested in the chemistry, that's it. When you discharge, so that you can see that formation, and when you discharge the battery, the anode dissolves. So it's a self-forming anode when you charge it, and it dissolves when you discharge it. So very neat technology, just using salt. Now, you're probably saying, well, if you've developed this in R&D, it's going to take years to commercialize. Well, we didn't develop this technology. As I mentioned, the Germans have developed the technology. We're just commercializing it. So they've spent 25 million on a pilot plan. These batteries have been produced. They've been operated, and there is a demand for these batteries. So the next question is, well, how did you get the access to this, and how did you get 75% of the joint venture? Essentially, they were after a company that had land in Germany, had some background in battery technology, some background in alumina, because the ceramic is alumina, and we met their criteria. So we signed the joint venture. We own 75% of the global technology, and we are essentially building a 100 megawatt plant in Saxony, Germany. Some of the videos here show you the extent of this $25 million pilot plant. So this is just well advanced, and you can see some of the design on the battery. So that's that battery there is a 5 kilowatt unit, but we are proposing to build 10 kilowatt units, 10,000 of these batteries. Now, people in Australia have solar panels. You're producing energy and putting it back into the grid at 4 cents, maybe, if you're lucky, and then buying it back at night for 28 cents, right? Whatever. So if you had some of these batteries in your home, you can actually use some of the energy you produce during the day. So these are the batteries, very exciting technology. As I said, 100 megawatt. We're going to spend 12 months getting a bankable feasibility study, and then we'll go for funding. And when we get this up and running, we'll then look for a gigafactory. Thank you very much for your time.
I thought you had so much more to share then with us, genuinely.
Do you have more time?
Oh, you can, would anyone like to ask, Eddie, would anyone like to ask Iggy a question about the technology and the potential? Or did it pretty much explain itself with the video? Yeah, okay, all right. You did, you shocked me. Iggy usually has a little bit more, I'm just going got to stop, aren't I? Because it sounds like I've been drinking and I haven't. Again, I promise you. But that does remind me to let you all know that we're having drinks afterwards. So, right. Who would like to be next? Tim Davidson, would you like to come up and join us, sir? From the back of the room. Wonderful. Now, Tim is from Meeka Metals. He's the CEO of Meeka. Now, Meeka is a gold and rare earth company with a portfolio of high quality projects over in WA. And in addition to its 1.1 million ounce mineral resource at the Murchison Gold Project, exploration is also underway. Oh, no, you're correct. Iggy, you've completely thrown me. Oh, I could blame you. Do you guys want to fight it out between yourselves? Because I've made the mistake. No, he's a lover, not a fighter. That was Tim, everyone, and he's just prepared for his next one. This is Keith. Excuse me, my apologies. Can I just rewind that and pretend the last 5 minutes of my life didn't actually happen? We are a little bit more advanced over in Western Australia than I'm portraying to you. Right, Keith Coughlan. Keith is the executive chairman of European Metals Company. He's got more than 30 years experience in mining, finance and advising resources companies on projects covering most metals and commodities in many and varied jurisdictions. But really, I reckon what the bloke is here to tell us about today is a little old project that he's got going over there. And it's a big project. And it's, we've heard about, you know, people wanting to have security as to the ability to get hold of these different minerals. But you don't just have the security, you also have neurity. Is it neurity you were calling it the other day? It was some weird neurology. Sorry. I think that was a made up term like my one with Pilgrim Minerals and Metals the other day. Regardless, would you please give this man a very warm welcome? He'll make a lot more sense than I.
Thank you, Chrissy. Thank you all for your attendance. Yes, I'd like to talk to you about our Synovix lithium project in Europe. We purchased this project way back in early 2014. So we've been at it for some considerable time now. We've been coming to these, or I've been coming to these sort of presentations for many years. And I think it's fair to say that the market, we've always consistently underestimated how many electric vehicles were going to get produced, what the demand was, what the uptake was going to be. And we've continuously overestimated how much lithium was going to be produced and supplied into that market. Consequently, we have a market in deficit, and it's going to be in deficit for some time. Hard to say. And that's why we have the lithium price doing what it's currently doing, which I'm sure you're all aware of is at all-time highs. After the speed reading course. So let me tell you a little about the project itself firstly. So the first differentiation, this is a fully integrated project. That is, we're not producing a concentrate and then selling it to China, for example, for further processing. We're going all the way through to battery-grade lithium hydroxide, battery-grade lithium carbonate. We have produced both of those key battery metals in our test work to date, both to battery-grade quality. This is a very, very large lithium deposit. It's the largest hard rock lithium deposit in Europe, by far the largest in the EU, which is an important distinction that I'll touch on shortly. And it's the fourth largest hard rock lithium deposit in the world. Now that's the size is important because it goes to long-term security of supply, but it also helps escalate the value of the project in the eyes of the European Union, which is becoming increasingly important for us. We updated our economics in January of this year, as you can see there, a large MPV after tax and a very good IRR after tax. I stress those numbers were calculated using a lithium hydroxide price of $17,000 a tonne, 17. And as of today, you just reverse those numbers, it's easy, it's now $71,000 a tonne. We have two very strong partners helping us with the project. The first there, CEZ, is the Czech National Power Utility. They own all of the grid, the grid power throughout the Czech Republic. They also own all of the electric vehicle charging stations throughout the Czech Republic. They're a publicly listed company, market cap of about 22 billion euros and 70% owned by the Czech government. So a very handy partner for us. The EIT is a formal body of the European Union. They run the European Battery Alliance that I'm sure you've all heard about, and also very handy to have them helping us with this project. We're fully funded through to our final investment decision. That's both at a project company level and at a European Metals level. And the company or the project has very, very good ESG credentials.
Now, the most important part of this is the location. The fact, as Chrissy mentioned, the fact we're sitting down in the middle of Europe. So the demand for lithium is going to grow quicker in Europe than anywhere else in the world with the uptake of vehicles there, and there's currently no production. So the European Union is fully committed to the thematic of building a battery industry from scratch and on an electric vehicle future. As you can see from this slide, they've committed €1 trillion to the Green Deal, which is all about this energy transition. The only thing that the EU doesn't have to round out this is the production of critical raw materials within the region. And they're not going to go and spend €1 trillion building this business plan and then rely on another part of the world, in brackets China, for one of the key ingredients. And this became very evident just last week. This is a fast-moving space, and just about every week we see some significant piece of news. But last week, the EU announced the European Critical Raw Materials Act. And I'm just going to read you a couple of comments from Marosepkovic, the Vice President, when talking about this act. He basically said, critical raw materials are strategic commodities and their supply can no longer be governed by market forces alone. This approach will help us to source primary raw materials at home to avoid risky overdependence on third countries, read China. We need to mobilise greater levels of financing in the sector and help de-risk European projects. We have to govern and accelerate their development. There is no alternative. And those words are like music to our ears. You know, the one criticism I've had, or the one major headache I've had in developing this project over the last few years, is just how slowly the wheels seem to turn in Europe. You know, they're building electric vehicles at a great rate, but no security of raw materials. And it's probably taken the Ukraine conflict and the gas crisis that's currently gripping Europe to bring this to a head. But finally, we now see these sorts of statements, very strong statements from key politicians in the EU about the development of projects like ours. The reason for this is the take-up of electric vehicles in Europe. These three key markets across the region these days, nearly 50% of all vehicles sold, in this case in July, in these markets, nearly 50% of all vehicles sold have some sort of electric capability. And in somewhere like, sorry, I took that slide out, somewhere like Norway, for example, that number's more like 90%. This is a really telling slide. On the left-hand side, we have the current battery factories in Europe, how big they are, who owns them, and on the right-hand side, what the case will be in 2030. So you can see the significant increase in battery capacity, therefore the significant increase in lithium demand. And just another slide showing that undersupply, the deficit in the market that I mentioned earlier. So Synovitz is very large, and this is important. We account for over 65% of all the known hard rock lithium deposits within the EU. So as I say, important for long-term security of supply, but also very important in focusing the EU's attention on our project ahead of perhaps some others, and ensuring that new legislation, the commitment in the EU to help develop these sorts of projects, is focused very, very clearly on us and getting our project up and running as quickly as possible. The gold star in the middle there is where the project is located. We're in the Czech Republic on the border with Germany, and you can see all the battery factories being built or in advanced planning around us. Incidentally, if all of these factories are in production by 2030, their full capacity would require more than 100% of all the lithium produced in the world last year. In fact, 125% of all the lithium produced in the world last year would be required just in this one corner of the globe. Now, Synovitz is a historic underground tin mine. Tin's been mined on and off here for over 600 years. That's very important to us from a couple of perspectives. On this slide, just talking about the infrastructure, all the infrastructure is in place, and the project has a very strong ESG profile. So re-entering a historic underground mine is clearly a lot easier than trying to permit a new operation, trying to dig new ground or dig an open pit. So apart from that key component of our ESG profile, there's a number of other factors here that help us deliver a project that will have an ESG profile as good as any lithium project globally. As you'll see from this slide, produced by Minviro late last year, independent consultant, who ran an LCA, which stands for Life Cycle Assessment, an environmental assessment, if you like. And we've got two bars there for Synovets talking about the global warming potential, or what we used to call carbon footprint. On the left would be the base case for Synovets if we had to power the project using the local dirty brown coal. Fortunately, our partner is the Czech National Power Utility, who already produce sufficient solar power in the region to commit to providing solar power to the project. And that's the difference between, or the majority of the difference between that first bar and the second bar, which is clearly a very, very good result compared to all other forms of lithium production globally. The other two key measurements you often use with your ESG credentials are water usage and acidification. The water usage because the brines use a lot of water, and that's an environmental issue, but also a political issue. We score very well on water usage, and acidification is important because the spodumene conversion uses a lot of acid, whereas our process doesn't, so we score very well there also. I mentioned chairs and EIT. We're short of time, so I won't go into that any greater level. I touched on the numbers earlier on. This PFS update was done in January at $17,000 a tonne. As you can see there, net of our tin credits, I mentioned it's a historic tin mine, we can produce battery grade lithium hydroxide for about $5,500 US a tonne. You can do the maths if you look at whatever lithium price you want to plug in there as to how profitable the project can be, but it's clearly significant. Incidentally, we ran this model over 25 years of mine life, producing that almost 30,000 tonnes a year for those 25 years, and it utilises only 13% of the overall resource at Synovets. It's a very, very big deposit. So we are in the process of putting together expansion studies to see what sort of production increase we can get to, but clearly anything we can produce, Europe will consume. Where we're going over the course of from here until production. So we will be completing our DFS and feed studies early next year, moving to final investment decision. But in the shorter term, between now and the end of this year, we'll be organising the financing for the project and importantly signing off-take agreements. It's been our plan all along to have a totally European solution to this project, keep the entire value chain within Europe. So we've been focusing on European off-take partners and as I say, they're a little slow, but those announcements of last week will significantly help that, and it's time that we put this together and got some off-take into the project. Building a very strong team here to develop this world-class project. This is the European Metals team, but apart from that, our in-country partner employs 35,000 people. You know, they are the largest company in the Czech Republic. We have no problem with HR on that side of the world. You know, they've been permitting and building projects in the Czech Republic since it became the Czech Republic when the wall came down in 1989. So just in summary, we're developing the largest hard rock lithium resource in the part of the world in which the demand for lithium is going to grow quicker than anywhere else in the world. Very good economics and very strong partners. If you'd like to hear any more, please come and see me at the desk. Thank you.
Stay, Keith, stay. Just stay right there. So can I give you my really nice introduction that I had for you, where I was talking about neurology? Do you want to hear his nice introduction? I had something all nicely lined up for him, which brings us to our next presenter, European Metals, who believe the location and potential of their project, Synovets, makes them perfectly poised to take advantage of the world's fastest growing market for EVs, neurology. There you go. Now tell us who you're backing this weekend.
I think Geelong will get up on this weekend. Yeah, which I'm quite happy about, I must say. Well, geez, I don't really like the Sydney boys very much. Football team, that is. Yeah, because they hurt the Eagles a lot in the 90s.
It's a personal thing. I got
kicked out of Redheads nightclub once here in my youth.
Oh, really? Joe, what was it? Stewie was saying to me the other day, we were talking about the Swans when they beat the Eagles. I was going to say us, the Eagles. Apparently there was a bit of a stuff up. You know, the big canisters that they shoot up with all the streamers and everything in them? They'd actually loaded both of the canisters, not one with blue and yellow and one with red and white, but both of them had red and white in it. So you can imagine if the Eagles had won that year, it would have been a complete and utter cluster, to put it nicely. Right, let's get Tim Davidson back up here on the stage. So we've met you just briefly. Hey?
Do we do the introduction?
Do you want me to do the whole thing? No. I thought I'd talk more about your drilling, your recent assays down Esperance Way, because they were impressive. They prompted the market to have a little bit of a flutter on you.
Well, we've had some really good drilling, not
Go
just
on.
from the rare earth, but from the gold as well. And
Yeah, that's
look,
true.
I
that's
know
true.
I need to keep it snappy because we are getting short on time, and I know I can sense from the room that you're all more excited about.
We make him welcome. Put your hands together, please, everyone. Tim Davidson, Chief Executive, Meeka Metals.
And I can sense that you're all more excited about the drinks afterwards that Stu's offered to put on. So keeping it snappy. Look, it is really great to be here and to talk about the rare earths. As I just mentioned, we have had some fantastic drill results for the gold. The gold's looking really, really good, and we're really excited by that. But we have, on Monday, we put out the most recent batch of rare earth assays from our Circle Valley project. The highest grade rare earth, clay type rare earth results that we've received to date. Very high, importantly, very high levels of neodymium and praseodymium, those two valuable magnet metals. So that's really important when you look at the economics of these projects. So we're very excited by what we see, and I'll talk a little bit about that today. But just touching on the corporate side of things, really important point is we've got a board and management team, and particularly the board, with a track record of delivering value in the resources space. A lot of that, most of that board, all of that board, this is my first CEO role, so excluding me, but everyone else on that board has been involved with other companies that have created significant shareholder wealth. So that's a key point. And they're also, the board and management team have created that value through exploration, discovery, and really an important differentiator in developing mines. So that's a key point. Not only have they discovered mines, but they've also put these assets into production, and we've got that experience and that track record. The other important point that I'll make is that you can see on the slide there, the board management team have bought into this company. We've invested alongside the rest of the shareholder cohort, where our families are invested in the business, and we want nothing more than what the rest of the shareholder group wants, which is to grow the value and create something of significance. And that's absolutely what we're trying to do. And we've got the team and the projects to do it. From a capital structure perspective, we've got a market cap of around $70 million. We've got a strong cash position. And what that allows us to do is to go and prosecute our plans to drill throughout the course of this year. We've got 2 drills operating as of today, one in the Murchison and one at Circle Valley. We'll be back down at Circle Valley early next year drilling for the rare earths, and again later in 2023 at Cascade. So we've got the cash position to go and do what we need to do, which is go and discover these ore bodies, which is really an important point. And if you look at the enterprise value, so 70 million market cap, about $9 million in the bank, an EV of around sort of 60. If you look at what underwrites the value of the business, it really is the 1.1 million ounces of gold in the Murchison. I'm not going to talk about the gold today, but if you look at value in the business, value it on the gold alone, it works out to be about $55 per resource ounce. So we're in line with our peer pure play West Australian gold explorers. We're very well aligned with that based on the EV per resource ounce. We don't think there's any value ascribed to the business at present due to the rare earth opportunity. And we think it is a significant rare earth opportunity. It's early days for us. It's something that we identified through our search for gold, and we were successful in finding that gold, but it was something supplementary to that search for gold, and something that we feel could be inordinately valuable over the coming couple of years as we sort of flesh out the metallurgy, put a resource around it, and do more work to outline to investors why that is such an important opportunity. So in terms of that opportunity, we've got significant land holding. We've got 2,500 square kilometres in that Albany-Fraser province. It's a tier 1 location. It's Western Australia. It's the premier place to operate. As a resource company, we've got the skills from an exploration perspective, but also the skill sets and the equipment and the technologies to put resource projects into production. Tier 1 location, province scale opportunity. We own the project 100%. It's not a joint venture. It's not shared ownership. We own the project outright. It's very fertile geology. Where we see where we have drilling, we see pervasive high-grade clay-type rare earth mineralization across a lot of that drilling. And we have drilling over 1,000 square kilometres of that 2,500 square kilometres. So significant scale. Where we don't have drilling, we have high-grade surface samples that present very exciting targets, never been drilled before, but very high-grade from a clay-type rare earth perspective at surface, never been tested at depth. And again, a high proportion of those valuable magnet metals, which is a really important point when you look at these deposits. And while it's the initial met test work, it's given us a positive first pass result. We need to do a lot more work on it to refine that, build a flow sheet, but a positive first pass met test, which is very encouraging. Now, just to frame why we think there is so much opportunity and value in the rare earth space, I just need to talk quickly about supply and demand. And key to this and key to the rare earths is, rare earths, they're used in glasses, in glass ceramics, in the automotive industry, in phosphors, in the military technologies, in the medical industry, but critically in electric vehicles and renewable energy generation. And the key reason for that is those two technologies use permanent magnets, and for permanent magnets, you need rare earth metals, principally neodymium, praseodymium, dysprosium, and terbium. So those four elements. So when we look at electric vehicles, for instance, global sales of electric vehicles, they're forecast to grow at 20% compounding annually over the next 4 years. It's going to be about 10% per annum after that. That's not forecast to slow down. By 2040, you're going to see more passenger electric vehicles within that global fleet than petrol and diesel cars. Each electric vehicle uses about 2 to 5 kilograms of permanent magnets. 30% of that weight is permanent magnet, is magnet rare earth metals, that NdPr, neodymium, praseodymium, dysprosium, terbium. So those are the really valuable, important ones. Touching on the wind turbines, so the direct drive wind turbines, again, they're forecast to grow at about 25% compounding annually for the next 10 years. Each installed megawatt of generating capacity uses about 650 kilograms of rare earth magnets. Again, 30% of that weight is in those rare earth magnet metals. So the magnet metals is really what's going to drive the rare earth market over the next 10 years and beyond. If you look at what drives the economics of projects, again, it's those magnet metals. While they only make up 23% of the rare earth market by volume, they account for about 90% of the value of the market. And because as they're growing, very strong growth there. That's forecast to go to about 30% of the market by volume and about 99% of the market by value by sort of 2030, so over the next 10 years. So really, the magnet metals is what is driving the growth in the rare earth market, and the magnet metals really is what drives the value and what is going to drive the economics of these projects. And just to touch on where we see supply demand going over the next few years, everyone we speak to sees supply and demand falling out of balance. Best case scenario, what you're looking at in that graph is the light blue on the background is demand volume annualized, and what you see in those bars, the dark blue is current supply, and that dashed red above that, that's projects that are in planning, feasibility, and plan to come online. Now, what we're seeing is best case scenario, all of those projects that are planned to come online and produce as planned and as forecast, which we all know how difficult it is to get new mines online on time and producing as people expected. Best case scenario is we end up with a supply deficit of about 15%. Worst case scenario is that some of those new projects get deferred or delayed or don't produce in line with what expectations were, and you end up with a supply deficit of significantly north than 15%. So no matter which way you look at it, everyone we speak to sees that market falling out of balance. And we just have to look to the last 3 years of price performance in those key magnet metals, which I mentioned drive the economics of these projects, to see what happens with when you have supply and demand roughly in balance, and what's likely to happen when that comes out of balance. And you can see those metals have appreciated in value significantly, between 400 and, in the case of terbium, up to 500%. So significant value appreciation in a balanced market. What happens when it falls out of balance? Well, we see the prices going significantly higher. The other important point is we don't see price dampening demand. And the reason for that is that those prices really only make up a very small proportion of the overall value of electric vehicles, about 1%. So even if you double the prices, makes a significant benefit to the producers, but it doesn't really impact the users of those technologies. Now, touching on our projects, really exciting opportunity. Like I said, province scale opportunity. We're in a tier 1 location, Western Australia. This is really where you want to operate as a junior resource company. And we don't expect to be a junior for long based on the breadth of our projects and the quality of our projects. We went down here looking for gold. We found gold. That was great. We also found through our geochemical analysis, looking for pathfinders for gold, these rare earth mineralization. We've now gone and secured significantly more land on the back of identifying that. 100% ownership, excellent access to infrastructure. The Coolgardie Esperance Highway runs directly between our tenure. The South Coast Highway runs directly through our Cascade tenure. There's abundant sources of renewable energy there, both wind and solar, just out of Esperance, very close to our project locations. It's readily available, and as I said, it's already in place. And very fertile geology. Now, I mentioned this already, where we have drilling over a significant area, over 1,000 square kilometres at Cascade along the southern corridor, very high grades, pervasive clay style mineralisation, so very encouraging early days. Now, specifically talking about Circle Valley, I mentioned we put some results out on Monday. These are the highest grade results we've received to date. It looks like the cover is shallowing to the west. So really good target for resource drilling. We're seeing very high proportions of those important magnet metals, NdPr, about 23% to date. We're getting grades up to about 30. The highest proportion we've seen of NdPr in the drilling to date is about 31%. So really high grade high proportion of that grade from a clay type deposit comparative to some of the others that we see around. And scandium, potential byproduct, don't know what the benefit is there, but and again, it's a small market, but it's an opportunity that we'll evaluate in addition to the rare earths. But the key to this project is, or all of our projects, is the proportion of those valuable magnet metals. Cascade. Now, Cascade is 10 times the size of Circle Valley. Circle Valley is 222 square kilometres. Cascade is 2,300 square kilometres. This is a significant opportunity for us. You can see on the slide there, we've got drilling across that southern corridor. That's 1,000 square kilometres. We can see high-grade results across that southern corridor. The clays appear in all of the drilling. It's not all high-grade mineralisation, but there's a very large proportion of those drill holes have high-grade mineralisation. Again, a very high proportion of that grade is in those valuable magnet metals. NdPr principally makes up about 20% of the total grade. Now, the other really important thing is the northern and central block, about another 1,000 square kilometres, very prospective, doesn't have any drilling, but we have very high grade surface samples. And that is, sorry, just before I touch on the surface, the northern blocks, I'll just show you a section through the mineralisation at Cascade where we do have drilling. Now, what you're looking at here is there's a very big vertical exaggeration on that slide. The distance between those drill holes is 1 kilometre. So you can see it's very, very large zones of mineralisation. In places, it's stacked mineralisation, but pervasive. The clay horizon is pervasive across that tenure, and a very, very good target for us to go and do more work and flesh out the drilling there, do more drilling, infill drilling, and put a resource around. Now, touching on the surface sampling, I indicated that the northern and central blocks, we're very encouraged there. We don't have drill samples yet, but what we do see in the surface samples is high-grade rare earths up to 633 ppm, particularly that cluster of really high-grade results at the bottom of that slide there, the bottom of that diagram on the slide there. That's an area of 20 kilometres east to west by 10 kilometres north to south. That's significant scale. And what's also important about that is that you generally don't see very high-grade rare earths at surface. You get a depleted zone at surface and then accumulation of that mineralisation at depth in the clay horizon. So we're very encouraged by the fact that we've got that high-grade mineralisation at surface. It's never been drill tested, has a high proportion of those valuable magnet metals, and presents a fantastic target for us to go and test in 2023, which was when we'll be back there drilling. Now, finally, I'll just touch on the network. This is first pass network. There's a lot of work. We acknowledge that there's a lot of work we need to do to build on this and build a flow sheet, which is what will allow us to take it from ore in the ground to a commercial saleable product. but very positive in that the results we get indicate high levels of high recoveries, and particularly high recoveries of those valuable magnet metals. So it's an important first step for us, but something that we will build on. Now, finally, what we have planned for the coming 12 months, 12 to 18 months, certainly very excited by the gold. That's something that we're going to work on. We've got a rig in the Murchison right now. We've got a rig at Circle Valley doing some structural diamond drilling. So very excited by the gold, but that is not going to take away from the work we have planned for the rare earths. Principally, fine-tuning the metallurgy. I said that's the secret or the key to unlocking the significant value that we see in the rare earths opportunity available to us. So working on that metallurgical processing, developing that flow sheet. We'll be back in January at Circle Valley drilling to put a resource around the rare earths at the Circle Valley project. And then later in the year at Cascade, where I mentioned we've got infill drilling to do where we have got drill results, and also some significant scale or some significant targets with significant scale in the northern and central parts. So really exciting mix of projects. We feel underpinned by the value of the gold at present, but an option on the rare earths, and something we think over the next couple of years could work out to be a very significant and valuable part of our portfolio of assets. So thanks very much for your time, and we'll be at the booth outside if you want any more information. Thanks, Chrissy.
Well done, Tim. Who are you backing? Who are you backing?
For my backing?
Yeah.
You'd be a brave person to back any other team than a Victorian team in this room, I think. So I think we're going for long.
Oh, you're clever, man. Okay, that's very. Hey, do you remember those tickets that I was telling you about earlier on today for the tragic Docker supporter in Western Australia? $2,350 each. He actually sold them. So he sold 2 to Geelong supporters here in Victoria. The other 2 he sold to Geelong supporters in Tasmania. Mates of his. There you go. That didn't take long to go. Andrew Dudley, would you like to come up here, sir? Right. I know that's left you all speechless, hasn't it? You know what I was thinking about when we go out to have our drinks afterwards, when Tim was talking about neodymium and praseodymium, I think we should actually use those. Now we have a charter for responsible service of alcohol to all of you when we have our functions afterwards. So what we should do is get a couple of the geologists perhaps to be doing the serving. And if you can say those words, then you can have your drink, because that would indicate to me that you're far more sober than I am at this point in time. Right, let's talk about our next presenter. Actually, there's lots of talk about our next presenter in the news over the last couple of days. If only we had been doing this talk on Monday here instead of today. It would have been interesting if he could have swayed you to become an investor in his project. We are talking Venture Minerals down in Tasmania. Let's hear about the project from a fellow who looks a lot happier than what we've seen in a while. His name is Andrew Radonjic. He's a geologist, a mineral economist, and today he's up on stage in his capacity as the MT of Venture Minerals. Please make him very welcome.
Right, thank you, Chrissy. Good afternoon, ladies and gentlemen. It's great to be here at the Melbourne instalment of the New World Metals Investment Series. And again, thank you to the Vertical Events team for holding another successful conference. Today, I'd like to talk about our flagship project at Mount Lindsay. So I don't think there's another tin company here today, but there's a lot of rare earth companies. And I suppose, even though we've got a tin tungsten asset, they're critical minerals in northwest Tasmania. We've announced just yesterday morning that we'd actually found some rare earths at Mount Lindsay project as well. So I'll talk a bit more about that, and also talk a little bit about our Chalice mining activities at in our Southwest project in WA. The Mount Lindsay project has already had $40 million spent in it, has more than 100,000 meters of diamond core drilling, completed an open pit feasibility study in 2012, and is one of the largest undeveloped tin deposits in the world. For those of you who don't know, Tasmania is looking like a tier 1 ESG jurisdiction. It's already net zero emissions, and we have access to renewable power in the form of hydro and wind power. At a time when tin prices are still above 10-year averages and still about 3 times the price of copper. For those of you who don't know, tin is an EV metal, and certainly the time for tin is now. That's our disclaimer. So we commenced our underground focused feasibility study this time last year, and that's about that we segued onto drilling all our collecting 10 tons of new metallurgical sample to test our new flow sheet, a much simpler combined gravity process compared to the conventional flow sheet that we generated back in 2012. So we're targeting a PFS will be completed this year. It took us 6 months to collect that 10-tonne sample. We have one drill rig drilling one shift a day, 5 days a week. So it's been a bit of a slow, painful process, but we got there in the end, and we delivered by plane by bringing 250 kilograms back ourselves just before Easter to get the process going. So we're going to get results from that shortly. The underground mine design will see an 80% or greater than 80% reduction in the footprint. We only use battery electric driven equipment. Dale Elphinstone from William Adams, ex-Caterpillar, is our major shareholder. He'll be keen to supply some of that equipment underground, hopefully in 2025. And we're also planning on placing all our tailings and our waste rock back into the mine that was originally started 100 years ago. We've also done a little bit of exploration last year before we got onto the onto drilling the feasibility or the metallurgical drilling. We've made 2 new discoveries. There's 48 EM targets. We've got a long way to go there. So I'll touch on the rare earth discovery, which was, I suppose, found during that phase of exploration, which we were doing just recently. We'll talk about Chalice, who have gone to stage 2 of our JV with them. They're going to spend another $2.5 million to go from 51 to 70% over the next 2 years. I'll touch on the Riley iron ore mine, which is in care and maintenance at the moment. And I probably won't have much time to talk about Golden Grove North and Coughlan, but please come to the booth afterwards and we can talk about that as well. There's our share price graph. If you followed Venture, you would have seen we had a $200 million market cap on the 30th of June last year, when Chalice was in full swing and the iron ore price was $230 a tonne. Back then, tin was something like $30,000. But certainly the position now at the moment, $47 million market cap at 2.6, probably closer to 50 now, and we've got probably around about $7 to $8 million in the bank. The board and an exploration manager, more importantly, have been with the company since it started in 2006. All the skills and the knowledge of the Mount Lindsay project, which we pivoted back onto when the tin price and the iron ore price went up for Riley, is available in-house and allowed us to move quickly. Like I said, today I'm going to very much focus on Tasmania and a little bit about the Chalice JV. Tasmania, for those of you who don't know, there's 140 years of mining history down there. 60% of the GDP of Tasmania comes from a handful of mines. And if you're in the mining industry, you'll hear these names, household names like Rosebery, Mount Lyell, just off the map here, Renison Bell, Australia's only tin mine, Savage River, Australia's only magnetite mine. And if you haven't realised it, I'll tell you now, MMG, 100% Chinese company, own Rosebery. Mount Lyell, obviously, is Australian owned. Century Zinc just purchased off an Indian company. Savage River is 50% owned by a Chinese company. So you can see that obviously someone else has recognised the potential of this area. This area is underexplored. It's hostile to humans to go in. It's difficult, it's cold, it's wet, and hence great opportunity for further discoveries. Mount Lindsay itself has a bit of history. 110 years ago, nearly to the day, we had mining there at Mount Lindsay, discovered by the same guy who found Rosebery, Tom McDonald. We also have in the alluvial tin field at the base of Mount Lindsay around Savage River, and this is where we picked up the rare earth mineralisation. You can see the hydraulic mining, not a lot of rehabilitation there, and the previous slide show there certainly isn't the pristine rainforest there. It's been mined and the trees have been knocked down and it's full of regrowth, and it's rehabilitated itself because there's 3 meters of rain per year. Now, a little bit about tin. For those of you who don't know much about tin, it's all about solder. There's about 0.1 of a gram in your iPhone, 3 cents worth of tin. If the tin price was to go to $100,000 per tonne, it would be 15 cents worth of tin. It has no impact. It's a spice metal. It's critical. Without solder, or the tin, should I say, which is 96% tin solder is, your iPhone will not work. That's how critical it is. It's not on Australia's list, it's on everyone else's list, but tin is integral for the decarbonisation of the economy going forward. So you want to achieve those 2030 UN sustainable goals, development goals, then you definitely need tin. In solar panels, tin foil, electric vehicles, about 400 grams per electric vehicle, each charging station, 1 kilogram of tin per charging station. And it's the anodes of every battery. That's lead acid and lithium-ion because it improves the ability to store energy. little bit more about it. 5G network, as we roll that out, more requirement will require an additional 30% more tin by 2030 just to meet EV demand. So tin is very much synonymous with the future. Tin, where is it found? Well, if you look at tin, it's mostly found in some very interesting jurisdictions. As you can see, China, Russia, Indonesia, Egypt, Brazil, Peru, Congo. This is certainly gives you much ESG confidence when you look at that group of countries. And Wood Mackenzie pointed that out last year. Certainly, if you want an ESG compliant source or a responsibly sourced tin, you need to come to countries like Australia and Canada. Canada doesn't have any assets. Australia has one mine, and we are looking to build the next new tin mine in Australia at Mount Lindsay. A very unique asset indeed. Bit about tungsten. Half our project's tin, half is tungsten. We've got a byproduct of magnetite. And for those of you who don't know about tungsten, it's like rare earth. It's controlled by China, 85% of it. China, as a consequence, is looking to develop downstream. So trying to get hold of these sort of products, and many people have spoken about rare earths today, is going to get harder. And tungsten's in the same boat. It's used in armaments, armor plating, armor piercing. It is a Cold War geopolitical strategic mineral. It's very important, and it's used in semiconductors, steel hardening, tungsten carbide drill bits, etc. So it has the same density as gold and the highest melting point for a metal. So very unique and well sought after. The US, by the way, had a strategic stockpile before the Cold War and the Berlin Wall came down. So it's looking to build that stockpile back again. Our intersections, if you look at King Island or Group Metal 6, you see these intersections like we have at Mount Lindsay in our high-grade zone. You go to Renison and you see very similar intersections. So we've got nice high-grade zones. We've got a third of King Island sitting in the same rock as our tin of 80,000 tonnes of tin metal in resource. We're going to focus on the underground, that 4.7 million tonnes just listed there, the higher grade material. 0.4% tin, 0.3% tungsten, and around about 15% of the rock is magnetite that can be turned into a 65% iron con. It's our JORC compliant resource from 2012, which we're looking to update with a pre-feasibility study. Bit about prices. Well, I didn't touch on before, 70% of this deposit's measured and indicated. In fact, the high grade's about 85%. The tin price, even though it's come off quite a bit, still above 10-year averages and 3 times the price of copper. The tungsten price hasn't moved. It's still at $327 per metric ton unit, which is still double the price it was in 2016. But we are in the premier tin district with obviously Renison down the road, and this geological map shows that. Renison mine sequence, this zone here in pink, goes all the way into our tenure, and the same host for the tin at mineralisation at Renison also is the same source of tin of mineralisation at Mount Lindsay, which is all very good. And certainly when we flew to EM over this, the first time anyone's ever done that back in 2019, the 48 EM targets we got, we drilled 2 of those. I'll touch on those in a second, but while I'm on this map, we've got co-funding for this target out here. We've got co-funding for a nickel sulfide target here in the ultramafic. Got 13 kilometres of ultramafic, by the way. And Avery's just way down here off the map, which is about to be restarted. And there's another target here we've got co-funding for. So there's a huge amount of prospectivity there still to be realised out of Mount Lindsay. So just zooming into that area there, that's the Renison mine sequence. We're drilling holes along here now, looking for another Renison belt. And then our intrepid geologist had his handheld XRF machine, zapped this mineral, didn't recognise, and he got neodymium. So it only has about 4 minerals there, which were read on the machine. And we saw the coincidence of phosphorus. We looked at an old data set, did a bit of data mining, as they call it, and we found that this place, Reward, lit up like a Christmas tree. So we went back to our 10-year-old samples. We found a few that hadn't been eaten by rats or got wet and rotted away or got lost in the move. But we found an easy 39 samples. We put it into the lab. Everyone else is assaying for rare earths. It took a while, but we delivered those results, which we announced to the market yesterday morning. And those results are very much in line with other companies that are just doing rare earth. It's clay hosted. We don't have its ionic yet. It's early days. Got 39 samples and it's open in all directions. So a little bit back onto like I said, this is an alluvial tin field here. That's 500,000 tonnes at 0.9%. That's sort of like underground type grade sitting at the surface. which we'll look to do a small open pit on. We were successful here with scar mineralisation, first hole back in the middle of last year. We were successful drilling an EM target along strike to Mount Lindsay. This is like a dead ringer for Mount Lindsay. I think probably the granite, it's been plunging away here, it's popped up again, a bit like Renison. So we haven't followed that hole up yet because of the met work and the other drilling we've been doing. And this is an example when you drill straight down the ore body and what you find at Mount Lindsay, 147 metres at a percent tin and plenty of scheelite. That's that sort of fluorescent blue material sitting here and some sensational grades, which is what you'd expect. Great for metallurgical testing. But like I said, we came across this rare earth. Now this is sitting in the hanging wall. So that's surface, they're 20 metres. It's very close to the surface. No assays there at all. No assays here or there, just in this portion here. And it's gone and got what could be called ore grade mineralisation, if you like, for rare earths. And that's sitting above our tin zone. Imagine digging a pit out like that shape, that would fall in there anyway. So the rig's been moved on to drilling that target right now. We also had some indications at the surface. I'll just focus on this. There's some historical gravels here from this. This is an alluvial area that's been mined for tin. And you can look at some of those grades. They're sensational. That's the four main rare earth elements that are sitting for magnets. And that looks like it's sitting potentially in the halo of our tin zone. So it's open in all directions. It's early days. We're going to get a bit of a feel for that. Just very quickly moving on to our Chalice Jv. You probably heard about this Western Province. We'd picked up this ground back in 2017 looking for lithium. But when you look at the area and the magnetics, you go, oh, this looks like a Julimar lookalike. That's exactly what Chalice said in July 2019, 2 years ago. And you can see that it's pretty obvious in the mag, the EM, we got EM responses. So 3 months after their discovery, they came and knocked on our door and did a joint venture. They've done the first spend, which is $1.2 million to get 51%. We'd already hit massive sulfide previously. We had copper, nickel, cobalt, and anomalous gold and palladium. They did ground EM to verify our airborne EM anomalies. They drilled those holes earlier this year, and they got very much what we got, which is probably no surprise. We got VMS style mineralisation. But what they did find is they found with their auger program, which was much more broader than we'd actually done previously with our laterite sampling. And that coincided with some airborne EM anomalies they did no groundwork on. So that's a whole new area. This nickel target here, ultramorphic, has been in the form of talc, has not been mapped in recent maps, in old historic maps. And we pegged that immediately after Julimar was discovered. So they, on a base of that evidence, committed another $2.5 million. A big tick in the box, this project going forward. Riley Mine, it's a free option to the iron ore price, and I'll leave it at that. It's under care and maintenance, and we can start it up quite quickly. So just summarising the investment opportunities: Mount Lindsay, tin, tungsten, critical minerals, ESG targeted production, actively exploring Australia's premier tin district, and now on top of that, we've got a rare earth opportunity. Thank you.
Give us your tip before you walk away. You've got 4 seconds. What's your tip?
I don't like Geelong. I'm a Richmond supporter, so come on the Swannies.
And he sneaks off the stage. All right. Now, some may say we are saving to the best to last, especially this fellow here who's making his way up to join us. But given, as we now know, there is many more times more graphite in lithium batteries than there is lithium. Our next company could be the sleeping beauty of the new world metal revolution. International Graphite Limited has been in full flight of late at their pilot plant over in Collie, Western Australia. And as they move towards creating a vertically integrated battery anode production facility in the West, let's hear more from their founder and their chair, Phil Hearse.
Thanks, Chrissy. Thank you very much, everybody, for staying the distance today. I really appreciate that, and it's lovely to be able to say good day to you now. But saving the best till last, we're talking about graphite. Graphite tends to be understated, but you may not know that since we've heard so many talks on rare earths and lithium, but graphite is the anode in lithium-ion batteries. there is up to 10 times as much graphite as there is lithium in a lithium-ion battery, and that just about every kilogram of anode material in lithium-ion batteries is processed in one way or another through China. So it's like super important. I would like to just give you a bit of background about International Graphite. It evolved from a consulting company, Battery Limits. Battery Limits was doing most of, or many of the feasibility studies for graphite projects for ASX listed and LSE listed companies in Africa and here in Australia. And while we were doing that, we realized that outside of China, there is virtually no capacity to provide downstream processing for battery anode materials in the Western world. So we initiated International Graphite about 4 years ago, commenced feasibility study, initially looking at Abu Dhabi in the Middle East. We then changed our focus to Collie in Western Australia. And in September last year, we did a deal with Comet Resources. We vended their graphite resource in the south of Western Australia into our company. And on the back of that vertically integrated business, we listed our company in April this year. So our vision is to be Western Australia's first vertically integrated mine-to-market producer of graphite battery anode materials. Our highlights, we've got a shallow, long-life deposit and resource at Springdale. At Collie, we've just completed, as Chrissy said, and commissioned the first pilot plant of its kind. It's probably, we believe, the most advanced and the largest pilot plant producing micronized and spheroidized material, which is on the way to the battery anode production. We're planning on introducing commercial scale micronizing next year. We're then going on to produce purified spherical graphite and then coated graphite. Being fully contained in Western Australia, it gives us great ESG stewardship. We can track our material from the mine right through to final production. And it also gives us the opportunity to add our bit to regional development in the state. It's already been said that Western Australia is a great place to be operating. It has recently been voted by the Fraser Institute as the #1 jurisdiction in the world for resource development and exploration. And as per our experience of development, our downstream processing experience, we have an extremely technically group of metallurgists and engineers. I think we've pretty well been through this. The most important curve here is from benchmark, and the light green histogram, that really shows the current production capacity of graphite. The yellow and blue bands show the projected increase in production capacity, and this is about 2025. This band here, this red line, shows the demand curve. Now, what that tells me is that there's going to have to be a lot of work done for commodities to meet the demand of the battery revolution. So we're doing our bit to building a world-class battery hub in Australia. Western Australia is blessed, as you've been seeing through many of the previous presentations. There are spodumene concentrators dotted throughout Western Australia now. In the southwest at Curtin University, we have the Future Battery Industries Cooperative Research Centre. We have the Tianqi IGO and Albemarle lithium hydroxide refineries. We've got Nickel West producing nickel sulfate. We've got EcoGraph, which is proposing to establish a downstream graphite processing facility in Kwinana. We've got Greenbushes mine, which is probably the best lithium mine in the world, and international graphite. Graphite has critical mineral status in Australia. There is great government support for establishment of this business, both at federal level and the federal government has already offered around $250 million in support to two of the graphite companies that are further down the track than us. We have already been given a $2 million grant by the West Australian government as part of our piloting and our first stage micronizing plant that we're building in Collie. So we've got 165 million shares on issue. We listed in April at 20 cents. We're hovering around the 40-cent mark. Our market cap's around $65 million. We had about $9 million in the bank as of 30th of June, and the board and management control about 41% of the business. Matthew O'Kane and Andrew Warland are our two commercial and corporate directors, and myself and Dave Pass, we're the technical people, and it's very much a technical driven business. We're going down 3 lines of development. First of all, feasibility studies for the Springdale Mining and Beneficiation Project. Secondly, the development of an industrial graphite production plant. And then thirdly, feasibility studies for the Collie battery anode material production. We've got our hands full. In terms of the team that's supporting us there, we've got Battery Limits, which is managing the Collie pilot plant work and the feasibility studies. Got consulting geos, Omni Geox working on it. Pro Graphite in Germany are our downstream advisory and test work organisation. Got a coating technology company in the USA working with us. Our MET test work being done in Perth at IMO. A major Australian research organisation is doing graphite purification work. We've got our environmental consultants, our hydrogeology consultants. Very importantly, we've had the same product marketing and sales consultant, an expert called Chris Whiteley from Lone Star, who is Texas-based. And our lead managers have been Peloton and Pamplona, who have done a wonderful job for us. Very quickly on the Springdale resource, it's located in the, it's located in the south of Western Australia. It's about 450 kilometres from Collie. We have a resource of about 15 million tonnes at 6% total graphitic carbon, including a high-grade zone of 2.5 million tonnes at 17%, which gives us a great starter. The processing at Collie is quite conventional. It's crushing, grinding, flotation, produce a concentrate, put in a truck and send it to Collie. Now there's great exploration potential there, and we have just finished a 7,000 metre drilling campaign, or the best that we could get when we got washed out. But we have been able to identify some terrific new zones, and we believe that there's great opportunity for massively expanding this resource. Previous test work has been done on the Springdale material that's shown that it is suitable for battery anodes. So the test work, the drilling that was undertaken, if we have a look, that the main resource is in a southwest northeast axis. Since that work was done, the electromagnetic survey work has been done, and each of these light coloured zones highlights an area, especially this one over here, of potential graphite mineralization. And in fact, we have now discovered here in this first range of drilling, the new zone that we're calling Far West. We've had some terrific hits on it. This flow sheet really represents the guts of our business. So there'll be mining at Springdale, concentrating to produce around about a 95% concentrate. With graphite, you can have a range of sizes. You can have coarse and fine sizes. The coarse sizes tend to attract a premium price, and they're used for foils. For like every mobile phone you've got, every computer you've got has got a graphite foil in it to dissipate heat. That's where the premium pricing is. Our material is fine, but it is very useful for battery anode material and industrial products. So we're taking that material. If you have a look on the industrial processing route here, we're purifying and micronizing, and the sort of products that will be produced for their engineered materials, conductive cathode materials, and lubricants. And on the battery anode side, we'll be micronizing, spheroidizing, purification, and then coating that material, and that'll be producing a premium battery anode material for lithium-ion batteries. Choice of Collie was a great strategic choice. We have got massive government support and community support in Collie. The power stations are being shut down there, the government-run power stations, and that's allowing us to really work as part of that community to help develop a new renewables hub. We've just commissioned our pilot plant. Said it's the most advanced one of its kind in Australia. And this really captures the strategy. We're first of all using imported feedstock, going to be producing products that have industrial values from about $1,000 to $5,000 a tonne, and then we will be getting our own Springdale project up and running. Our value of our concentrates will be about $700 to $800 a tonne. We'll then be converting them to purified spherical graphite, and bearing in mind you need about 2 kilograms or 2 tonne of concentrate for a tonne of purified material, but that's valued at about 3,500 to 4,000. These are all US dollars. And then the real value adding steps, continuing to put it down the value adding steps, bring up that value to about $8,000 a tonne. So our timing, we have already completed the drilling campaign, which was started in June, just after we listed. We expect to have an updated resource Q4 this year. Our pre-feasibility study completed by Q2 next year, and a definitive study by the end of next year, with a finance investment decision for Springdale around the first quarter of 2024. On the downstream processing, we've completed our installation and first product out of our pilot plant. We expect to have our micronizing production line, the first line in by Q2 2023, a pre-feas study at the same time, a definitive study early 2024, and a finance investment decision then Q1 2024. Thank you very much.
Thank you, Phil. Right, your tip. Philip, come back, your tip. What is it? You really don't care. What's your tip for the final, the grand final? You remember that game they're playing with a bit of pigskin on the weekend?
Well, my wife and I are actually going along. My wife Robbie's sitting over there now, so she's just lady in pink there.
Fabulous. And what's your tip?
Sydney.
Did you pay $2,350 for your tickets?
No, we got bargain price, 2,100.
Oh, really?
But,
sorry, hold on.
but you get to listen to these old has-beens that they try to entertain you before the game, you know, but it's all part of the deal.
All right, okay. Good on you, Phil. Welcome. Thank you so much for rounding out the conference for our presenters. Thank you very much. Right. Now, as Jackson noted at the start of the conference today, we've been really honoured, very, very honoured to have some wonderful experts, keynote speakers to come and address you all over the course of the conference, not just today, but when we were in Sydney and also when we were in Perth. giving their insights and their views into this particular part of the resources sector. Alex Tonks from CRU started us off today, highlighting some of the opportunities in the medium to long term in this sector. And to close out our 2022 series here in Melbourne with his insights into the growing list of metals that seem to be critical to global decarbonisation, electrification pursuits. I swear I'm not drinking yet. This is the Oracle of Argonaut. Would you please make welcome Eddie Wigg?
Thanks, Chrissy. It's a pleasure to be here in Melbourne. It's even a bigger pleasure. I'm going to the grand final on Saturday, and I'm going for Geelong. I reckon they're a great side. So my talk is about, everyone talks about energy transition metals or the future facing metals or critical metals or new age metals. It's all the same thing, right? It's all about how do we reduce the carbon footprint, stop global warming. So it's the transition of fossil fuels across to EVs, renewables, etc. What I'm going to try and do is a little bit different because it's great hearing these companies present and they're passionate about what they've got. But I'm going to try and sort of set out, is it real? Is it sustainable or transitory? And I actually have a joke, but I'm not supposed to say, but it's a bit like Dean Laley. Anyway, so let's go. So what are these metals? There's 10 of them. We didn't make this up. It's in Wikipedia. You can look at these metals, right? And as I said to you, it's all about these being critical and the new type of power delivery. So as I said, energy transition, it's about reducing global warming. It's a transition across from hydrocarbons. But we've got to keep this a bit real. And you'll see on the next slide what happens when people get cold. What it means is that coal production today in terms of value is 10 times the value of all these 10 minerals now. So there's a long way to go before it becomes particularly really relevant on a global basis. But it's important. We seem to be moving very fast forward as towards this energy transition, and I'll talk about later as to really there's a bit of a trade-off here. Is it really that great for the economy and the environment when you see the amount of mineral intensity required to deliver this outcome, which a lot of deep thinking people have come up with? So what I like to do is when we do these talks is to be, as I said, be a bit real about things and look at what happened with all these metals. And if you have a look here, this is what in 2021, so calendar 2021, we saw these new age metals absolutely outperform, and lithium being the top performer, cobalt, neodymium. But have a look at 2022 when people worried about being cold in Europe, when the Ukraine invasion comes in, when people start going back to basics. Have a look what happens. Coal's the best performing commodity. Lithium still stayed strong. We see natural gas, crude oil. And guess what? We've all been hearing about how important neodymium is for the permanent magnets. And guess what? The second worst performing metal. So we just got to remember we look at these talks, we listen to these people, what is actually really going on out there? And so when most people here are here because they want to make money on the stock market. I imagine that's why people are here. So, and when I look at here and you say, what are the best performing resource stocks this year to date in the ASX 300 resources? And have a look at it. It's littered, I say littered with coal companies, gas companies, and of course, it's mattered with a few, we're back there, with a few lithium companies. And I showed you before, lithium's continue to be an outstanding performer. What we do know about the market rarely follows consensus, and it's particularly forward-looking, and it does respond to shocks very aggressively. This slide here is another interesting slide, and it's a slide where we go, if you had $10,000, what would that $10,000 look like if you invest that $10,000 in different things? So we're focusing on the type of companies present here. So last year, if I put $10,000 in the small resource index, it made a bit of money, but I'm putting the old world commodities, still did okay. New world commodities last year, as I showed you a moment ago, performed very well up there about 38%. But if I invested in the actual companies in that space, the companies which were presenting in that space at last year's conference in Perth, I put 10 grand evenly spread across them, I would have returned over 70%. This year, very different, reflecting those commodity prices. And this one shows you here that the small resource index, if you invested 10 grand in 1 January this year, it's only worth $9,300. The ones the companies represented in Sydney, up at 10,600. Perth, a little bit higher, just $100 more. And then the companies which are presenting here actually outperform the other ones. And this is all set as 8th of September when I presented in Perth. And that shows $10,900. So it'll be up $900, which barely pay for my dinner tonight. I'm going to a nice restaurant though, but it will barely pay for it. But once again, the old world economy up 21%. So it's an interesting thing when you look at this, where we're all at. So we're all saying we're all getting hyped up about, but the fact is, it's not the actual results on the scoreboard this year don't reflect the enthusiasm sometimes. This is a good slide because it talks about the growth rates, and we sort of see these as the sort of 4 really good bellwethers. And when we're hearing a lot about rare earths, and I'll talk a bit about rare earths today because it is a very difficult thing to understand. Copper, we see copper is really the really important one. It doesn't matter what you do in energy transition, you're going to see copper playing a role. And we're seeing copper going from about 24 million tons to 2050, about 63 million tons. In today's dollar terms, that makes it a $500 billion industry. Lithium, interesting enough, we're seeing lithium grow about 6-fold, which much higher growth rate. But based on the lithium carbonate price, that indicates it's about a $300 to $350 million industry. And that doesn't make a lot of sense to me because the application, the use of copper is so far greater than lithium. Of course, you can't have lithium-ion batteries without lithium, but that's a small part of the energy transition. So what that tells us that copper has to go up relative to lithium. And our view at Argonaut is that it should be at least a 3 times the size market of the lithium market. We love lithium, but I think copper is a great place to be long-term. Hard to get exposure in Australia. With Oz Minerals now being subject to a takeover bid, it is challenging to get exposure there. Nickel, we'll talk about nickel because nickel's often been regarded as a metal or a prosperity metal. And it was used when the world's going great, you have stainless steel in your house and stainless steel in your boat. But when things get a bit tougher, we look for cheaper substitutes. But we think the exposure, what's going on with nickel batteries means that it's a great space to be in. And we, as I said, talk about rare earths coming off a very low base. And just on today's dollars on a basket price, that would make it about a $70 billion industry. This is an interesting slide. So everyone's seen the slide on the left-hand side here, passengers, which creates a 5-time demand increase in batteries. I want to sort of talk a bit about what this all means over here. And everyone's concerned about, we talked about what happened in Ukraine, and what happened in Ukraine caused a drive back. Everyone was concerned about energy independence, concerned about diversity of supply chain. What people don't appreciate on these metals here, these important energy transition metals, they're far higher concentrated than oil and gas is. So just understand, it's a far higher concentration. There's greater concern for the world about where we're going because of this concentration. To put it in perspective, so rare earths, 61% of rare earths are mined in China, 87% are processed in China, and 91% of magnets are made in China. Lithium, over 50% is produced out of Australia. Cobalt, absolutely dominated by the DRC, and nickel increasingly dominated by Indonesia. So what we have here is a far greater concentration, which gives enormous concern to the governments of the world about the independence of diversity and security of supply chains. When I talked early on, I said, we got to do this a trade-off here. And I don't think always people appreciate what this is going to do to the minerals industry. Most of these minerals we're mining, not all of them, but most of them, they're very small percentages. So we're going to mine lots and lots of dirt. And more, the way we're going to extract these is not mineral processes, it's chemical sets. And I'm not sure everyone wants to have a chemical set in their backyard. And this is a good example. There's 6 times more minerals required in a battery EV than there is required in an internal combustion engine. And what that means is 3 times more copper, 9 times more lithium, 40 times more nickel, 2 times more manganese, 13 times more cobalt, and 66 times more graphite. We heard about graphite in the last talk. That's a massive increase in requirements. The other thing I'll put to you is that, and this is something which you sit back and everyone goes, let's have a wind turbine because it's good for the environment. but there's 9 times more minerals required in a wind turbine than there is in a gas-fired power station to produce the same power. So I think we also need to take a sit back and, you know, when we look at things today, we sit back and we go, oh, look what he did 10 years ago, you know, in this new woke environment we've got. And I sit back and I go, hang on, I think the reasonable chance in 20 years' time, we'll sit back and say, we move too fast in some of these areas. By the way, I do love the space and it's great for brokers who work in this space. But lithium, we talked about lithium, and this is a good graph to show you where the lithium companies are listed, but also show you the market cap of lithium companies vis-a-vis the addressable markets. So this here shows you this is all the 61 largest lithium listed companies in the world. This is the Chinese stock exchange. This is the ASX. This is North US. This is Toronto. And this is little old London, which is becoming more and more relevant. But what it shows you here is that currently the lithium carbonate price is about $60,000 a tonne, and that addressable market is sub $50 billion. But the combined market capitalized 142, and if you add on the attributable market caps to these large diversified companies, it's about $180 billion, or 3.7 times the addressable market. What this tells us is that this group here, the market's suggesting that invest in this group here because this is going to grow and grow and grow, as what's been reflected in those earlier graphs. This is back on the lithium carbonate. And I just want to, so this price here is the lithium carbonate price. And look at that crazy, going up like that. It's just amazing rise. Perhaps people aren't aware, they hear these different terminologies, lithium carbonate, lithium hydroxide, lithium sulfate, SC5 and Hearse. Just what people might want to know is that, keep it simple, DSO was 1 to 1.5% lithium metal, SC5.5, 6 as a concentrate, which is 5.5 to 6% lithium metal. A lithium sulfate, which is an intermediate midstream product, is about 13 or 14%, and they're looking to build the first plant of that in Port Hedland in the next couple of years. And then you've got lithium carbonate, which is 19% metal, and we use that because that's the deepest market, the market which is least opaque that way. And then we've got lithium hydroxide, which is about 29% metal. So it gives you a bit of an idea, because you hear these terminologies, not always people appreciate what they mean. What's interesting about this graph here is that the last sort of semi-boom we had, the combined market capitalizations of the lithium companies on ASX in 2018 hit $8 billion. In April this year, before Goldman Sachs came out and said the music is stopped for the lithium companies, the market cap's got to $48 billion. So it's just ASX listed companies. And then it dropped back to sub 30, but now it's picked up to about $34 billion as of yesterday. But when I presented a week ago, it was actually back up to $42 billion back up. So what it shows you here is this enormous rise, but the market caps are going up. This price here hasn't come down, but for our viewers, that, you know, whether it's sustainable up at that level, it's unlikely to be that case. But it just shows you this rapid increase, and it's stabilizing here now. Great story, Pilgrim Minerals, near-death experience back in 20, in 2019, 2020. As we know, the next door neighbour, Artura, did go under. Last year, they finished the year after losing $51 million and having a market cap of about $6 billion. Once again, obviously forward-looking the market is. This last year, they recently announced the result of making $563 million profit for the year. And the market cap today is, you know, that over $10 billion, approaching $11 billion. But the point I want to make on this slide is just the amazing cash build of this company. In the June quarter, they added $589 million in the June quarter. That's their cash build, one mine. Just to put that in perspective, if you added the cash build of every gold producer, from the smallest gold producer up to Northern Star, but excluding Newcrest, every gold producer, their cash build was less than that. One company, one mine was more than all the cash build of all the gold companies listed on ASX bar Newcrest. Pretty amazing result, right? You know, these guys are selling SC5.5, or even sometimes less, for $6,000 a tonne, and they're producing it for sub $1,000. Well done, boys. You can't talk about any transition unless you talk about copper. And they call it Dr. Copper because people regarded copper as doctor because it's the barometer of the global GDP, or the global economy's health. And whenever you mention recession, copper goes down. Whenever you say things are going well, they go up. And we saw that in 2021, where we saw a nice 26% increase when people with their stimulus, their low interest rates, all of a sudden we're now talking recession. You can't read the paper today without the word recession being written down there at higher interest rates. So we're seeing copper drop 21% this year. But let me tell you, I don't think the market's appreciating the amount of copper which goes into the energy transition. People have seen the slide to the left a lot, but it's well worth emphasizing. There's 3.8 times more copper required in an EV than an internal combustion engine. 3.8 times. So it's about 90 or 93 kilos of material of copper is required in an EV. And so that we expect that the crossover, when there's more copper used in EVs, to happen as early as 2024, 2025 versus internal combustion engines. That's not the only place we're seeing copper happening. Copper, the amount of copper required, whether it's solar farms or wind farms, there's a dramatic increase in the amount of copper being required. So we don't think the market's quite appreciating, this is also the global market, the importance and how much copper is going to be used in this energy transition. The same applies to nickel. Mentioned earlier, regarded as a prosperity metal. And we've seen today, this year, a drop off in price. But when we slide across to how much nickel is used today, we expect that the amount of nickel in stainless steel will go down from just under 1.1 million tonnes to down to about 700 million tonnes, 700,000 tonnes. But the amount of nickel going into batteries and energy transition is a 500% increase this decade, which means you put those numbers together, it's a 50% increase in the amount of nickel. Nickel's not easy to find, and it's not easy to mine, right? And when there's a 50% increase, you know, the outlook for nickel companies, I think, is tremendous, and the nickel price. Rare earths. We've heard lots of things about rare earths. We've seen it's the second worst performing metal this year. But let me tell you, the four metals, and we've heard there from Tim before, those four metals are praseodymium, neodymium, and the light. So let's go back to rare earths. What are rare earths? There's 17 metals described together. There's 17 metals which come in 5 minerals. And the metals are broken into lights and heavies. You can't do a magnet without praseodymium and neodymium. And then as vehicles change in wild fluctuations in temperature, they need the dysprosium and terbium to keep them all stable, right? So you can't have electric vehicles without these. These four metals, if they're not in deficit now, they're moving into deficit the next year or two, and we've heard that from Tim. Their prices have gone up. Neodymium and praseodymium is up about 200%, 150%, 200%. Terbium is up more, but it's tiny, whereas there's only about a 50% increase in dysprosium. What I can say, though, it's very challenging, this industry. There's one mine outside of China. One mine outside of China, right? So when you see all these other mines coming up into production, well, good luck. That mine's Mount Weld. Mount Weld was discovered in 1968 as a phosphate mine. So there's a lot of phosphate. We heard that also. There was about, you find phosphate and phosphorus, you'll likely find some rare earths. 1968, it pivoted to rare earths in 1990. It then commissioned in 2012, and it finally became cash flow positive in 2019. And it is generally accepted as the best rare earth mine in the world. So if it takes that long for the best project in the world to become cash flow positive, I think we've got some challenges ahead to get more supply on. And I mentioned you before, these different types of minerals. So monazite's the one we all know about, heard about. Bastnäsite, there's got some real benefits in bastnäsite because there's already been some weathering done. So we expect that the processing of that will be easier. Xenotime, which is normally associated with heavy rare earths, so dysprosium, terbium. Apatite is another type of mineralogy. Nowhere in the world is that commercially produced anyway, not whether China or anywhere else that anyone can extract the rare earths in there. This is what Arafura is doing, and we are hoping Arafura will be able to crack that. And then is ionic clays. You heard lots about ionic clays. And we saw some, you would have heard presentations today about people saying they've got these rare earth clay deposits in West Australia. We don't know if they're ionic. And if they're not ionic, it means that the ability to process and extract the rare earths of that will be very challenging. We don't know if they are or not. There's without doubt, or there's no definitive proof that we actually have an ionic clay deposit in Western Australia at this time. Yes, there's clay deposit, whether ionic or not. And if they're ionic, it means that you can extract it from a very weak acid leach. Pretty much in China, you can extract the rare earths from almost salts, just a salt solution. We've now I mentioned here before about this is rare but not well done. So that's the rare earth space. One thing we need to understand is that China absolutely controls the IP. They actually do patent this, so that's amazing because normally they steal the patents, but this one they've actually got the patents. We have an expert in Western Australia called Dudley, Professor Dudley Kings North, and he attended a NATO conference on critical minerals just before COVID. And it was an interesting comment made. He said at the conference I talked about we absolutely need an independent and diversified supply chains of rare earths for the future of EV. The challenge is that there's more than 5,000 PhDs in China focusing on this space, and there's only 50 in the rest of the world. So we've got a way to go. The other part is China. When I say China controls the IP, there's only 6 companies in China allowed to do rare earths. Each one's an SOE. 2 of them control over 90% of that production. Each one has a phone directly straight through the most senior people in the Chinese government. No senior scientist behind this area has a passport. Just tells you how controlled this is. China's focus is to build a finished product and deliver a finished product. It's a bit like France. They'll sell you wine, but they won't sell you grapes. And I mentioned this before. So the last time we had a boom in this space, back at similar time, about 2011, 2012, there was $15 billion raised for the companies who identified themselves as rare earths. There were 60 so companies with 200 different projects. About 15 billion was raised. At the end of the day, most of them pivoted, some of them pivoted away from that, but over $10 billion was spent in this space and it delivered 1 mine. So it's a challenging area. But what we do know, the structural and economic drivers for this space are enormous. You know, the amount of, we heard, the amount of rare earth oxides required in a finished product is negligible. And governments everywhere in this world wants to ensure that we've got diversity of and guarantee of supply. And just this one point here, it's a really interesting one. To meet demand, we need a new Mount Weld every 2 years. So I don't know what this is going to mean. Does it mean we're going to have to substitute some sort of, permanent magnets out? But I'm not sure how electric motor works without a permanent magnet. This is a great slide. Not much more to go, guys, but this is a great slide. West Australia and Australia has been regarded largely as a quarry. And what we've seen recently is this downstream processing in Western Australia. So Western Australia is going to have 2 rare earth refineries. We don't have refineries in Australia anymore, but we're going to have 2 rare earth ones, one of the most important metals going forward into the future. One's been built by Iluka with the funding of the Australian government, 1.25 or 1 billion and 50 million going in with $200 million in overrides. And the government's basically funding that on a 50-50 economic interest. And the other one's been done by Linus, the owner of Mount Weld. They currently produce rare earth oxides in Malaysia. They're looking to do another project plant in China, in the US, and they're also doing one at Kalgoorlie, which is well and truly being built. It's they're spending a lot of money, nearly $1 billion there in Kalgoorlie, and it's great for Australia. We already talked about the lithium hydroxide plants. At Argonaut, we believe this commodity cycle is going to last longer because let's think about it. What are the great things which have changed household wealth historically? First one was the Industrial Revolution and the generation of the internal combustion engine. It changed the wealth of people. The next one was most probably rebuilding after World War II, after all those things were destroyed. Then it was the urbanization of China. And we would say to you that this transition of power from hydrocarbons across to clean energy has potential to have the same sort of impact as what the urbanization of China did. And we know how much that increased the standard of living, not just in this country, but obviously in China and many other parts of the world. And we think this will be elongated, not because how big that driver of that changes, because the supply side will be so dampened as a result of disruption through logistics we saw in COVID, the multi-year approval processes nationalisation of assets. It's very difficult to find some of these rare earths, not just rare earths, but lithium and projects in countries. So it's only countries like in Africa and South America, you find something good, next thing you don't own it. So it's a very challenging way to finance these projects, and most ore bodies are blind. Just want to finish up. Who's Argonaut? Argonaut is a specialist investment banking and stockbroking firm focused on resources. There's 60 of us. We've been around for 20 years, and we're extremely technically driven. Our firm, we have 5 geologists, mining metallurgists. We use the same software as the very biggest companies use to analyze resources. We've got North American license. We have an office in Hong Kong with our connection into China. China consumes about 50% of all the products we make, so we've got to have relationships into China. We're a member of ASX. There's only 2 of us left out of WA now, where most resource companies are based. And we do, and this is one thing, this is a plug for us at the end, we do run a fund, wonderful fund. The guy who runs it actually is not a mining guy, but that's deliberate. We have about 5 specialists who feed information into him. He makes decisions based on portfolio construction. This fund returned 44% last year. And if you went back to a slide before, the industry only did 4%. Small resources, the ASX 300 index, which he compares with, did 4%. He's done 44%. And over the 2 years, he's done 125%. Australian Fund Monitors, independent review group, rated him #1 alternative fund manager in Australia, and the #2 out of all 700 funds raised here. So if you want to know more about it, there's some documents outside, but thank you, everyone. Hopefully I've given you some thought about the space we're in. We're excited by it, and go Geelong.
Did anyone want to put a question to Eddie?
Hey, happy to take any questions.
No bugger. Apparently Jackson said bugger it. You can all ask him a question over drinks.
Or we'll
That's
go
how
and
it's
drink
going.
beers.
Is
Yeah.
that all right? Okay,
Yeah.
you can go drink beers. Wait, before you all go though, I just wanted to say that Stewie designed this series, this New World Metal series. And the idea, of course, was to connect you with ASX listed companies across the junior and the mid-tier sectors, resources sectors, who are making an effort to sustain our future. Although after listening to Eddie there, perhaps there are some question marks that we need to put into that plan. But it could mean that it jumpstart a view on investing in companies with the potential to power our future wealth portfolio. So if you would like to see any of these presentations again, you can jump onto the Vertical Events website, go to our YouTube channel. If you would like to read the actual presentations in full, please go to the company's websites and click up the top, because they should be, all my companies who are still in the room, you should be putting that presentation on your website so that we can all access it. If you've got a copy or a subscription, excuse me, to the Australian, then nip on there, go online and go back and have a look at our lift out that we did, because that's a really good reference point as well. Anything else I need to let you know about? I think that's it. I think for those of us who are there, those of you online, thank you very much for joining us. Wait, I've got a hand up the back. Oh, it is? Great. Thank you so much. So that one for Eddie, if you want to follow Eddie's, you can get that on the website, which is great. Thank you so much, Eddie, for that. Right. For those of us who are here, we can have a drink. We can talk to the presenters. Remember our Techno conference in November and our Busselton conference in October. And we love to see you more often now the borders are open. Thank you for coming today.